systems in India followed by RBI. To begin with, I would like to give a brief overview of the payment systems in India. The central bank of any country is usually the driving force in the development of national payment systems. The Reserve Bank of India has been playing the role of the central bank in India since years and has taken several initiatives for the safe, secure, sound, efficient, accessible, and authorized payment systems in the country. The Board for Regulation and Supervision of Payment and Settlement Systems, a subcommittee of the Central Board of the Reserve Bank of India itself, is the highest policy-making body on payment systems in the country. This body is empowered for authorizing, prescribing policies, and setting standards for regulating and supervising all the payment and settlement systems in the country. The Department of Payment and Settlement Systems of the Reserve Bank of India serves as a secretariat to the board and executes its directions. In India, the payment and settlement systems are regulated by the Payment and Settlement Act 2007, which was legislated in December 2007. And this act, as well as the Payment and Settlement System Regulations 2008, came into effect in 2008. In terms of Section 4 of the PSS Act, no other person other than the RBI itself can commence or operate a payment system in India unless authorized by RBI. Thus, RBI has since authorized payment system operators of prepaid payment instruments, card schemes, cross-border inbound money transfers, automated teller machines, and centralized clearing arrangements. Now, I'll explain the payment systems. The Reserve Bank has taken many initiatives towards introducing and upgrading safe and efficient modes of payment systems in the country to meet the requirements of the public at large. The dominant features of large geographic spread of the country and the vast network of branches of Indian banking system require the logistics of collection and delivery of paper instruments. These aspects of the banking structure in the country have always been kept in mind while developing the payment systems. To begin with, we have paper-based payments. Use of paper-based instruments like checks, drafts, and the like accounts for nearly 60% of the total volume of non-cash transactions in the country. In value terms, this share is around 11%. However, the share has been steadily decreasing over a period of time, and electronic mode is gaining popularity. Since paper-based payments occupy an important place in the country, RBI had introduced magnetic ink character recognition technology for speeding up and bringing in efficiency in processing of checks. Later, a separate high-value clearing was introduced for clearing checks of value rupees 1 lakh and above. This clearing was available at select large centers in the country and since discontinued. Recent developments in paper-based instruments include launch of speed clearing, introduction of check tournication system, framing of CTS 2010 standards, and the like. While the overall thrust is to reduce the use of paper transactions, given the fact that it will take some time to completely move to the electronic mode, the intention is to reduce the overall movement of paper, both for local and outstation clearance of checks. Next is electronic payments. The initiatives taken by RBI in the mid-80s and early 90s focused on technology-based solutions for the improvement of the payment and settlement system infrastructure, coupled with the introduction of new payment products by taking advantage of technological advancements in the bank. The first one we have is Electronic Clearing Service Credit. The bank introduced the ECS credit scheme during the 1990s to handle the bulk and the repetitive payment requirements like salary, interest, dividend payments of corporates and other institutions. This ECS credit facilitates customer accounts to be credited on the specified value date and is presently available at all the major cities in the country. Regional ECS. Next to the national ECS, regional ECS has been launched during the year 2009. It's kind of a miniature of an ECS and is confined to the bank branches within the jurisdiction of the regional office of RBI. Under the system, the sponsor bank will upload the validation data through the secured web server of RBI containing credit debit instructions to the customers of CPS, enabled bank branches spread across the jurisdiction of the regional office of RBI. The next one we have is Electronic Clearing Service Debit. The ECS debit scheme was introduced by RBI to provide a faster method of effecting periodic and repetitive collections of utility companies. ECS debit facilitates consumers or the subscribers of utility companies to make routine and repetitive payments by mandating bank branches to debit their accounts and pass on the money to the companies. This tremendously minimizes the use of paper instruments apart from improving process efficiency and customer satisfaction. The next one is electronic funds transfer. This retail funds transfer system was introduced in the 1990s and it enabled an account holder of a bank to electronically transfer funds to another account holder with any other participating bank. The next one is National Electronic Fund Transfer System. In November 2005, a more secure and updated system was introduced for facilitating one-to-one funds transfer requirements of individuals and the corporates alike. Available across for a longer time window, the NEFT system provides for batch settlements at early intervals, thus enabling near real-time transfer of funds. The next one is Real-Time Gross Settlement System. The RTGS is a funds transfer system where transfer of money takes place from one bank to another on a real-time and on gross basis. Settlement in real time means payment transaction is not subjected to any waiting period. And gross settlement here means that the transaction is settled on one-to-one basis without bunching or netting with any other transaction. The last one is Clearing Corporation of India Limited. The CCIL was set up in April 2001 by banks, financial institutions, and primary dealers to function as an industry service organization for clearing and settlement of trades in money market, government securities, and foreign exchange markets. It plays a very crucial role of a central counterparty in the government securities. The USD INR Forex exchange, both spot and forward segments, and collateralized borrowing and lending obligation markets. CCI plays the role of a central counterplay whereby the contract between the buyer and the seller gets replaced by two new contracts between CCIL and each of the two parties. This process is called novation. Through novation, the counterparty credit risk between the buyer and seller is eliminated, with CCIL subsuming all counterparty and credit risks. Lastly, we have a couple of other payment systems. First one is prepaid payment systems. The prepaid instruments are payment instruments that facilitate purchase of goods and services against the value stored on these instruments. The value stored on such instruments represent the value paid by the holders of by cash, by debit to a bank account, or by credit card. The prepaid payments instruments can be issued in the form of smart cards, magnetic stripe cards, internet accounts, internet wallets, mobile accounts, mobile wallets, and paper vouchers. The use of prepaid instruments for cross-border transaction has not been permitted, except for the payment instruments approved under Foreign Exchange Management Act. The next one is mobile banking system. Mobile phones as a medium for providing banking services have been attaining increased importance, especially with the pandemic. Reserve Bank brought out a set of operating guidelines in mobile banking for banks in October 2008, according to which only banks which are licensed and supervised in India, have a physical presence in India, are permitted to offer mobile banking services, obtaining necessary permission from Reserve Bank. One of the example is SBI, which started their own app called YONO SBI. These guidelines focus on systems for security and interbank transfer arrangements through Reserve Bank's authorized systems. The next one is ATMs, point-of-sale terminals, and online transactions. Presently, there are 61,000 ATMs in India. Savings banks customers can withdraw cash from the bank terminal up to 5 times a month without being charged for the same. To address the customer service issues arising out of failed ATM transactions, where the customer's account gets debited without actual disruption of cash, the Reserve Bank has mandated recrediting of such failed transactions within 12 working days and mandated compensation for delays beyond the stipulated period. Moreover, there are over 5 lakh POS terminals in the country which enable customers to make payments for purchases of goods and services by means of credit debit cards. To facilitate customer convenience, the bank has also permitted cash withdrawal using debit card issued at the banks at POS terminals. Lastly, I would like to explain the National Payment Payments Corporation of India, the Reserve Bank encouraged the setting up of National Payments Corporation of India to act as an umbrella organization for operating various retail payment systems in India. The NPCI became functional in early 2009 and has taken over the National Financial Switch from Institute for Development and Research in Banking Technology. The NPCI is expected to bring greater efficiency by way of uniformity and standardization in retail payments, and expanding and extending the reach of both existing and innovative payment products for greater customer convenience. Lastly, there is an oversight needed for the payment and settlement systems. The oversight of the payment and settlement system is a central bank function whereby the objectives of safety and efficiency are promoted by monitoring existing and planned systems, assessing them against the objectives, and where necessary, introducing change. By overseeing payment and settlement systems, the RBI helped to maintain systematic stability and reduce systematic risk, and to maintain public confidence in payment and settlement systems. The Payment and Settlement Systems Act 2007 and the Payment and Settlement System Regulations 2008, framed thereunder, provide the necessary statutory backing to the Reserve Bank of India for undertaking the oversight function over the payment and settlement systems in the country. That's it for the presentation. Thank you so much.